Hello my dear friends, it's Yuri Tsvetkov, and today I want to make a video about a subject which is not so highly relative to my channel about golf, but it's very highly relative to my previous life. And some times ago I have tried to make the video about the financial markets on English language. I have made some of them on Russian language, and currently I have decided that maybe it will be not so highly understandable um, for my subscribers when I'm making videos about different subjects. Some of them on Russian are made, but on the English they will not be made it. And in this connection, I have decided to make this video to describe my opinion about the current market situation. But before that, I need to talk a little bit about my previous experience on the financial markets. I was involved in the securities market, securities trading and sales industry during many years, and I have a small private fund which we are managing together with my friend, and which is the sources of money for us. And in this connection, I need to say that some years ago, I have made quite a critical decision for myself when I have seen that the market, it was maybe in 2016, when I have made decision to stay in the banking and the investment banking industry, or to change or radically my position in the life. And I have decided that the golf is a newborn direction for the St. Petersburg area. It's quite difficult to believe, but here in St. Petersburg, the first normal championship golf course was built just maybe 5 years ago or something like that. In this connection, it's still the newborn market, which is opening the good opportunities for the employers, a different kind of employers. And I have decided that even if I will work as a caddy, I will guarantee to myself that I will receive my salary for the pleasure of my clients. But if I will stay in the industry and I will need to sell some kinds of the instruments to my clients, to my investors, I will need to sell something like the subordinated bonds, because for them it was the big demand from the client. And I have decided if I will sell them the subordinated bonds, they will maybe happy some years with the additional yields which they will receive from such an instrument, but in any moments of the life, I will know that sooner or later, tomorrow or day after tomorrow, in 1 year or 2 years, it will be a situation on the market when my clients could lose a big portion or maybe even all the money which I invested in such an exotic but mostly marketed instruments in the on the current financial markets. This connection, I have decided to change direction of my activity, but certainly it is not the former traders and the former investors, and in this connection, such situation which was on the American market last years. I'm looking for American market because it's highly influencing on the situation of all other markets. So such a huge situation is highly influencing for maybe, it seems that it's short-time moves, but this short-time moves is influencing for many years, or maybe 2-3 years in the future. And in this connection, I have decided that the American market is currently overvalued and in many cases inefficient, and inefficient from the bullishly inefficient, because as we know, the market consensus on the current stock market such that 92% of the total participants of the market before the last day were thinking that the market have were thinking bullishly. And in my opinion, in such situation, when the 92% of the all participants are bullish, is talking us that we are very close to the pivot point, and we are very close to the situation when the market can change direction of the move. In some cases, yesterday we have seen such initial move on the market, which can show that the market is changing the fast pace and from the bull market is going to the bear market. Certainly one day it's not well enough to make such a huge and serious decision, but from the other side, the size of the move have shown us that the market become to lose for one day those amounts which he made during the previous 10 days or something like that. And we can see that it was not such big gap during the previous at least 1 or 2 years for one day move, I mean. Sometimes we have such days, and the correction on the market will always quite strong in such days. And exactly it was, it looks a little bit the same by the size of the move, excluding the gap which we had in the October 2018. And after that, the correction will in size approximately 20%. But the most dangerous that currently we can also be in the much more stronger and much more difficult situation, because if the current we never know that the environment of the market is such interesting that it looks like the situation in the March of the 2000 of the new millennium. And we know that after that the market have tried to rise. It was a very strong correction in the short period of time. After that, market exactly achieved those levels which were the March levels in the August of this year. But after that, we had a very strong bull market for almost 3 years, and the total correction of such a market for S&P index was approximately 50%, but for the and more than 50% from the size of the move, the uptrend move. But for Nasdaq index, it was much more a difficult situation, and the losses were much more higher. Currently, the market could be described. Here we will see the Nasdaq. Yeah, it was much more higher. Currently, we can describe and we can see that the move in the end of the trend, maybe not exactly the same which we had now, but it's also the exponential move, when the trend in the end of the period becoming higher than it was during the previous periods of the trend. And this connection, currently we have the market on which the different services and the different high technology companies have a very big influence and very big weight in the major indexes. In this connection, it's quite reasonable to expect correction which is relative to those ones which were in those times. Plus that the rhetoric of the current president of United States is exactly the same as it was during the times of the Bill Clinton, who also talked just about the very good situation on the financial markets, about the good economics, and about the possible without crisis development of the nation and of the country. And we know that a lot of investors have lost their capital in those periods, and mostly international investors from different Arabic and other countries. So Currently, it's not the same situation as it was in 2007 and 2009. It's much more difficult situation in my opinion, and this connection, this situation needs more attention from those people who will be dependent from such a market. So I have decided to make this video to talk about my opinion. To those of you who are relative to this to the financial markets, and maybe it will be useful video for you, because first of all, it's a little bit different experience from the people who is living in different culture, but who was involved and who was dependent from the financial markets even 20 years ago. The main problem of the current market is that not so just a small portion of the active participants on the market have experience of this serious crisis, and in this connection, the new generation of the traders who are mostly looking for the high-speed, high-frequency trading and for algorithmic trading, they are thinking the market is absolutely different. But this difference with the previous markets are not so highly, it's not safe, not more safety than it was before, because those fact that 95% of all deals are made by the robots currently. The algorithmic systems is mostly the huge risk, but not the huge advantage, because in those times the people were much more maybe critical to the different aspects of the trading. Currently, this criticism is killed by the artificial intelligence, and in this connection, certainly when the market is growing so strongly as it was during the second part of the previous year, a lot of contrarian opinions were killed by this move. And in this stage, in the day before yesterday, the situation was that it was the historical lowest level of the parts which were bought by the wide public, and the historical lowest level of the short positions on the market. And this connection, the last move, upside move, mostly were related with the killing of the short positions, and with the highly in one direction changing of the evolutionary system of the market. The markets are still interesting for me also because I am the follower of the Michael Mauboussin, who is writing very interesting articles about the relationships between the different skills which are necessary and which are common for the players in the games, in different probability games, including in the sports, such as sports as a golf, which I have found it as most interesting probability game all over the world, and such areas as the securities trading and trading at all. So I hope that this video maybe will be the starting one for those of you who are also thinking that those skills which are necessary on the golf course, in the strategical game at least, not in technique certainly, but mostly with the analysis of your game or the other players' game, and the financial markets, who will find something similar, and who are looking for the positive feedback from one direction to another one. Certainly, it's a big difference because mostly the success in the golf is dependent from the moving skills, not from the mind, but the mind is also highly important, such as for development of such skills. including movement skills, such as for the analysis of the game and the building of the efficient strategy of the game. And efficiency is also more very important subject in this case. And in my opinion, financial markets are only a good place to convert the bearish inefficiency of the market in the bearish periods of bearish inefficiency of the market in the profits and the income from the market, and the bullish inefficiency of the market for closing positions, for the closing long positions. I'm not so highly involved in the short selling, and I'm not, it's quite a difficult business because they're bounded on the downstairs trends are very tremendous, and volatility is very high, and the period of the drawdown is quite a short. But from the other side, it's not so highly necessary to make money on the short side. It's much more important to have money, to save money, still those periods when the bearish inefficiency will come and the opportunities will be built by the panics on the market and by the oversolding of the stocks on the market. So thanks a lot for your attention. The video became longer than it's maybe necessary. I'm sure that no one of you will look it till the end, but I hope that maybe you will come back to this video and to watch it maybe second time and the third time and by portions. Depends from the development of the next development of the situation on the financial markets. Thank you very much for your attention. I will be happy if I will find the colleagues who are looking maybe not exactly the same way as I did, but the subjects will be interesting for them, because for me it is very important not only to have my opinion but also to have independent opinions of the market participants who are working on the buy side mostly. The sell side is most related with the marketing, not with the investment as a process. And this connection, the buy side opinions are highly interesting, and in this case I will be thanks a lot for any comments or any links which are related with this subject, to have the efficient opinion about the market but not subjective, because as most of us, I certainly understand that I'm analyzing this information depending from my opinion for the market. So if I'm thinking by the bearish way, I mostly finding the bearish information from the total information which is coming from markets. Thank you very much. Hope to see you again on my channel. Have a good day, have a good market, have a good profit. See you. Bye bye.